becomes non-performing when it ceases to generate income for the bank. Now, how we classify a term loan account as NPA? Whenever interest or installment or both, installment of principal, they remain overdue for a period of more than 90 days. We all know about it. So we should remember two words: overdue, more than 90 days. Overdue means not paid on the due date fixed by the bank. Now, in this, because there is a significant change from the earlier provisions of RBI, the change was given effect by circular dated 12th November 2021, and it was reiterated in 1st April 22 circular. So they have given the concept of day end. Earlier, if the due date is today, 4th January, the account will become overdue on 5th January, next date. Now this has been done away with. Please listen carefully. What the revised instructions say, that when the day end of 4th January will be run by the bank, maybe at 5 p.m., maybe at 10 p.m., maybe at 12 p.m., on the same date, it will be treated as overdue. Day end on the due date, it will become overdue. So this is the change. So net effect is the date of NPA gets preponed by 1 day. Now this is exactly the example given in RBI circular of 12th November, page 3, para 4. I have not changed the dates.
Sir, Agrawalji, are you changing the slides?
No, I'm not changing.
Okay.
That if the due date of payment of term loan installment is 31st March 21, what shall be the date of NPA? So it will become overdue on the 31st March 21 day end. So when it will complete first day of overdue on 1st April day end, 1st April 2021 day end.
Excuse me. For me, I am still seeing the IRAC guidelines.
This next slide is not coming.
No.
So I think the same thing will be happening with the other participants.
Are you all seeing the Bonnie, which slide you are seeing now?
IRAC guidelines only.
IRAC guidelines not moving.
Yeah, not moving.
No, yeah, now it has moved.
Yeah.
Identification of NPA, it has come to identification of NPA, yes.
So I think, can I work like this? Is it visible?
Yeah, you do. You proceed.
Okay. One thing can be done. I think, let me try this. If it is seen now, full slide is being seen.
No, we are seeing one slide, but we are seeing one slide plus 2 tiles also. But if you want to, if you change it, do one thing. Come below, you can try to increase that, Agrawalji.
Oh, right. That can be done.
That you bring it to the middle, slightly more. Oh, now it has gone to slightly reduced.
It is not seen by me now.
Yeah. Slightly reduce. Okay, it is slightly you can increase. Just that's sufficient. Yeah, let it remain. Okay.
I will sort out the what error I am committing. I will sort it out later with your guidance. Okay.
No issues. Okay, please.
So we have to calculate when the 90 days overdue period will expire. You see, its first day is on 1st April. Due date was 31st March. It became overdue on the overdue at 31st March 21 day, and 1 day it will complete on 1st April. So 90 days when it will complete, April 30, May 31, and 29 of June. 30 plus 31, 29, it becomes 90. So on 29th day end, this account will become NPA. So my date of NPA is 29th June 2021. Now this RBI has clarified, para 2.3 of RBI circular, that borrower account shall be flagged as overdue by the lending institution as part of their day-end process for the due date, irrespective of the time of running such process. So I can run the day-end at 5 p.m. I can run the day-end at 6 or 10 or 12 p.m. So whenever the day-end process is run, this account day-end process for due date is run, this account will be categorized as overdue. This is the change brought about by Reserve Bank of India. Another question number 2, due date of payment of term loan installment is 27th November. It is not paid fully. What shall be the date of NPA? So friends, because due date is 27 November, it will become overdue at 27 November day end. It will complete one day on 28th November. So when it will complete 90 days, so November 28, 29, 30, 3 days, December 31, January 31, February 25. So on 25th February, it will complete 90 days. So when day end is run on 25th February, this account will be categorized as NPA. Now, as against a term loan account, we can have a CC account or overdraft account, which are in the nature of a running account. Multiple credits, multiple debits. So for this, the criterion is different. A CC or OD account is NPA if it remains out of order. If it is out of order, then it will become NPA. So when it is out of order, first condition is if the outstanding balance remains continuously in excess of sanction limit or drawing power, whichever is less, for 90 days. We have given a CC limit of 1 lakh. The DP is 80,000. And if its balance remains continuously in excess of 80,000 for 90 days, this account will become out of order and it will become NPA. Now, there may be a possibility when outstanding balance is less than limit or DP, but there are no credits continuously for 90 days. Though the balance is 40,000, but for 90 days there were no credits, or credits were there, but they were not sufficient enough to cover the interest debited. So in these two conditions also, this account will become NPA. Now friends, before November 2021, where I have put this asterisk, the phrase as on date of balance sheet was there. Means there are no credits continuously for 90 days as on the date of balance sheet. Now this as on the date of balance sheet has been omitted. And in second clause, credits are not enough to cover interest debited during the same period. Earlier phrase was same period. Now the same period has been replaced by previous 90 days period. So see friends, what significant change it has brought about. We know that we are compiling our balance sheet on quarterly basis, March, June, September, December end. So on the date of balance sheet, I was seeing whether there are credits in the account for the 90 days preceding date of balance sheet or not. Or during this period of 90 days, credits are enough or not. But now I have to see this on every day of 365 day of the year. This 90 days period may not terminate on the date of balance sheet. This 90 days period can terminate on 15th August, 26th January, 20th October, 4th January, any date. whenever there is a continuous period of 90 days and there are no credits. It is not necessary that the continuous period of 90 days should terminate on the date of balance sheet. Or during this period, this 90, whenever I'm seeing there, today, say I'm examining the account today. So I will see previous 90 days period if their credits are not enough to cover the interest debited. In such scenario, this account will become NPA. Question 3, I am leaving. You can read and work out the data of NPA. In addition to this, when there are overdues, there are some non-financial reasons by which a account can become NPA. So first assume that you have sanctioned a regular CC limit today. 4th January 23, you sanctioned, you got the documents executed and you disbursed it. So normally this account is sanctioned, this limit is sanctioned for a period of 12 months. So by 4th January 24, it should be renewed or reviewed. And if it is not done so, it is neither reviewed nor renewed, within 180 days from 4th January 24, this account will become NPA, irrespective of the balance was always below sanction limit drawing power, credits were there, credits were sufficient to service the interest. Even then, this account will become NPA. For regular limits, 180 days from the anniversary date. But if I have sanctioned an ad hoc limit today, the ad hoc limit may be sanctioned for 1 month, 3 months as per the bank's guidelines, no problem. But from, say, if I have sanctioned an ad hoc limit today, 4 January 2023, the ad hoc limit may be sanctioned by your bank for 90 days. But the borrower has got 180 days time from today to adjust it. If he should liquidate the outstanding within 180 days from today, or he should get it converted into a regular limit. And if it is not done, then this account will become NPA. So 180 for regular limit, 180 days period is from the anniversary date. For ad hoc limit, 180 days period will commence from the date of sanction of ad hoc limit. Another situation may be when the stock statements are not regularly submitted. Say your 30 December stock statement, 31st December 22 stock statement, it is submitted in first week of January. You calculate the DP, you enter the DP in your system, computer system, and you allow the operations. So on the basis of December statement, if I allow operations in January, February, March, they are deemed to be regular drawings. And if I go beyond it, if I continue to allow operations in this account in April, based on the stock statement of December, my drawings will be treated as irregular. And if such irregular drawings are permitted in the account for a continuous period of 90 days, this account will become NPA. So for old stock statement, this account can become NPA. For non-renewal, non-review of limits, this account can become NPA. Question 4, I am omitting. Question 5, I am omitting. Bill purchased and discounted. We have seen how the account is categorized as NPA in case of term loan, in case of CC, in case of OD. Now we come to bills facility. So every bill purchase or bill discounted facility has got a due date. The bill should be paid by that date. So if the bill remains overdue for a period of more than 90 days, this bill purchase account, bill discounted account will become NPA. Credit card dues. Most of us, we use our these credit cards issued by one bank or the other. We spend the money, we get a bill. In the bill, three things are there: total amount due, minimum amount due, and due date. If the minimum amount due is not paid fully within 90 days from the payment due date mentioned in the bill, this credit card dues will become NPA. I'm repeating. In older provisions, it was if this amount is not paid within 90 days from the payment due date mentioned in the next statement. So next statement is not there. In the same statement, if I have received the bill today, some bill due date is mentioned, so I have to invariably deposit minimum amount due within 90 days from the payment due date mentioned in the bill. If I do not do that, my credit card account will become NPA. In case of agricultural advances, let us first consider about crop loans. There are two types of crops: long duration crops and short duration crops. Long duration crop means crop season longer than 1 year. Crop season starts from sowing to harvesting. And if the crop season is not longer than 1 year, the crops which are not long duration crops, all those crops will be treated as short duration crops. So far, a term loan granted for short duration crop will become NPA if principal or interest remains overdue for 2 crop season. In case of short duration crop, overdue 2 crop season. Long duration crop, overdue 1 crop season. This will become NPA. Now, this criterion is applicable only to loans for crops, agricultural implements and machinery, pre and post harvest activities, pledge hypothecation of agricultural produce up to rupees 50 lakh, KCC accounts also, individual farmers, including self-help groups, to corporate farmers, etc., etc. It means wherever the agricultural advance is such that the repayment depends upon the realization from crop, then this criterion will be applicable. But agricultural advance may be for dairy purpose. Some buffaloes advance, some cow advance. Right? It may be for poultry purpose, fisheries purpose. Now, in such advances, their recovery is not dependent upon realization from crops. For such advances, my usual 90 days delinquency norms will be applicable. Wherever the recovery is linked with the realization from crop, only those advances will be governed by this criterion. Now, this I have given an example. You kindly go through it. Short duration crop for Kharif, Rabi, long duration sugarcane. The date of finance is there. Sowing season, harvesting time, repayment. So, what shall be the date of NPA? You kindly go through it. Based upon this criterion, you will be able to arrive at the date of NPA. KCCs, which is very much relevant for all the banks, but particularly the rural banks, Grameen banks. The Kisan Credit Card Facility is essentially in the nature of a CC accommodation. One card is issued, the borrower, farmer can draw the amount, can pay the amount periodically, repeatedly. So whatever criterion was applicable for CC limit, CC facilities, it is applicable to KCC account. The KCC account would be deemed to be NPA if it remains out of order for a period of 2 crop season, 1 crop season, as the case may be. The KCC account will be treated as out of order If there are no credits in the account continuously for 2 crop season, 1 crop season, the outstanding remains continuously in excess. The credits are not sufficient to cover the interest. So the 90 days period, this is replaced by 2 crop season or 1 crop season, depending upon the type of the nature of withdrawal which we permitted in the KCC account. Now we come to identification of NPA in case of government guaranteed accounts. This account can be guaranteed by a central government. This account can be guaranteed by a state government. For a state government, no exemption. Usual 90 days delinquency norms are applicable. But for accounts guaranteed by central government, there is a slight concession. If the account becomes overdue, we invoke our guarantee and central government does not disown the guarantee. They say that we will not accept, we do not accept the guarantee for some reason or the other. They agree to honor the guarantee. Then such account, for asset classification purpose, it will be treated as a standard asset. It will be categorized as standard asset GG. GG means government guaranteed. But this exemption is only for the purpose of asset classification, but not for the purpose of income recognition. We will see later on that whenever an account becomes NPA, we interest on an NPA can be taken to income account only on the realization basis, not on accrual basis. So this central government guaranteed account, here also interest cannot be taken to income account if it is not realized. So for interest recognition, it is NPA. For asset classification, it is standard. This is for central government guaranteed account. The important thing which you should all note, that guarantee by ECGC, Export Credit Guarantee Corporation, this is treated as a guarantee by central government. Question 6, 7, I'm leaving. You can.
1 minute, Agrawalji, 1 minute. Can you go
Yes.
to that guarantee? Okay. Yeah, I just told I just talk to them in Malayalam for a minute. See, ഇതിപ്പോ നിങ്ങൾക്ക് അങ്ങനെ സാറ് പറഞ്ഞു മനസ്സിലായോ? അതായത് NPA ഐഡന്റിഫൈ ചെയ്യുമ്പോൾ അക്കൗണ്ടുകളെ നോൺ പെർഫോമിംഗ് അസറ്റ് ആയിട്ട് നമ്മൾ കണക്കാക്കുന്ന എപ്പോഴൊക്കെയാണ് കണക്കാക്കേണ്ടത് എന്നുള്ള ഗൈഡ് ലൈൻസ് ആണ് അങ്ങോട്ട് പറഞ്ഞു തന്നത്. ടേം ലോണിൽ എന്താണ് കണ്ടീഷൻ, വർക്കിംഗ് ക്യാപിറ്റൽ എന്താണ്, ഓവർ ഡ്രാഫ്റ്റിൽ എങ്ങനെയാണ് കണക്കാക്കേണ്ടത് എന്നുള്ള കാര്യങ്ങളൊക്കെ പറഞ്ഞു തന്നു. എത്ര ദിവസം, 90 days എങ്ങനെ കണക്കാക്കുക, അതിന്റെ വർക്കിംഗ് ഔട്ടും എക്സാമ്പിൾസും ഉണ്ട്. അത് നാളെ ഞങ്ങൾ PPT നിങ്ങൾക്ക് ഷെയർ ചെയ്യുമ്പോൾ നിങ്ങൾക്ക് അത് മനസ്സിലാക്കും. അതിൽ ക്വസ്റ്റ്യൻസ് വരും. പിന്നെ അതേമാതിരി ചില അക്കൗണ്ടുകൾ NPA ആയിട്ട് ക്ലാസിഫൈ ചെയ്യേണ്ട ആവശ്യമില്ല. അതിലൊന്ന് സെൻട്രൽ ഗവൺമെന്റ് ഗ്യാരണ്ടി ചെയ്തിട്ടുള്ള ഒരു ലോൺ ആണെങ്കിൽ അതിനെ NPA ആയിട്ട് ക്ലാസിഫൈ ചെയ്യേണ്ട ആവശ്യമില്ല. പക്ഷേ ആ അക്കൗണ്ടിൽ നിന്ന് നിങ്ങൾക്ക് ഇൻട്രസ്റ്റ് ചാർജ് ചെയ്യാൻ പറ്റില്ല. NPA ആയിട്ട് ക്ലാസിഫൈ ചെയ്യേണ്ടത് മാത്രമേ ഉള്ളൂ. ഇൻട്രസ്റ്റ് എടുക്കാൻ നിങ്ങൾക്ക് അതിൽ നിന്ന് പറ്റില്ല. അപ്പൊ അതിലാകെ നിങ്ങൾക്ക് കിട്ടുന്ന ഒരു ബെനിഫിറ്റ് ക്ലാസിഫൈ ചെയ്യേണ്ട, അതിന് NPA പ്രൊവിഷൻ വെക്കേണ്ട, ആ ഒരു ബെനിഫിറ്റ് മാത്രമേ ഉള്ളൂ. പക്ഷേ സ്റ്റേറ്റ് ഗവൺമെന്റ് ഗ്യാരണ്ടി ചെയ്ത അക്കൗണ്ട് ആണെന്നുണ്ടെങ്കിൽ അതിന് ഈ ബെനിഫിറ്റ് എലിജിബിൾ അല്ല. അത് 90 ദിവസം അല്ലെങ്കിൽ NPA ക്ലാസിഫിക്കേഷൻ നോംസ് എങ്ങനെയാണെന്ന് വെച്ചാൽ അതനുസരിച്ചിട്ട് ദാറ്റ് വിൽ ബിക്കം NPA. മനസ്സിലായില്ലേ? അതേമാതിരി ഈ സെൻട്രൽ ഗവൺമെന്റ് ഗ്യാരണ്ടീഡ് അക്കൗണ്ട്സിന്റെ കാറ്റഗറിയിൽ ഈ എക്സ്പോർട്ട് ചെയ്യുമ്പോൾ ECGC ഗ്യാരണ്ടി പറഞ്ഞൊരു കവറുണ്ട്. ആ ഗ്യാരണ്ടി കവറുള്ള അക്കൗണ്ടുകളും NPA ആയിട്ട് ക്ലാസിഫൈ ചെയ്യേണ്ട ആവശ്യമില്ല. അപ്പം നിങ്ങൾക്ക് വരാവുന്ന ക്വസ്റ്റ്യൻ NPA ക്ലാസിഫിക്കേഷനിൽ സെൻട്രൽ ഗവൺമെന്റ് ഗ്യാരണ്ടീഡ് അക്കൗണ്ട്സ്, സ്റ്റേറ്റ് ഗവൺമെന്റ് ഗ്യാരണ്ടീഡ് അക്കൗണ്ട്സ്, ഇതിൽ ഏതാണ് NPA ആവാൻ ഉള്ളത് ചോദിച്ചാൽ ഇത് നിങ്ങൾ മനസ്സിലാക്കിയിരിക്കണം കേട്ടോ. അതൊന്ന് ക്ലാരിഫൈ ചെയ്യാൻ വേണ്ടിയാണ് ഞാൻ പറഞ്ഞത്. ഓക്കെ, ആൻഡ് യു ആർ ഗിവിംഗ് സം ക്വസ്റ്റ്യൻസ് ഓൾസോ, isn't it, Agrawalji?
Okay, right, sir. Right,
That
sir.
you can, yeah, good. Thank
Thank
you.
you. Thank you. Thank you. Now we come to advances, loans against liquid securities like fixed deposit receipt, national savings certificate, IVP, KVP, life insurance policy, etc. Now such advances, because securities are easily realizable, so RBI has stipulated that such loans need not be treated as NPA, although interest thereon has not been paid for 90 days, provided adequate margin is available. So their condition is adequate margin should be available. So what is adequate margin? Because here, suppose you have given a demand loan or against FDR of 1 lakh rupees. You have maintained 20% provision, you have given 20% margin, you have given 80,000 rupees. Now this FD, with passage of time, the value of security will increase because of accrued interest on FDR. At the same time, my loan value will also, loan outstanding will also increase due to application of interest. So long as current value of security is more than current value of loan, I will say that adequate margin is available. My value of loan should always remain below my value of security. So if this is so, then this account need not be treated as NPA. So once if it is not NPA, then interest on such advances may be taken to income account on accrual basis. Now this exemption is not available to government securities. IVP, KVP, kindly note that government securities are here, I mean different thing. You must have seen that, say, UP, Kerala government has issued a 5% bond, right? They issued bonds and debentures, state governments, and we invest for the purpose of as maintaining SLR. So some person may be holding such securities issued by state government, some other government. Not those. This exemption is not available to those government securities. This exemption is also not available to mutual funds. And this exemption is not available to advances against gold ornaments. Though gold ornaments, this security is also quite liquid. We can easily sell in the market and realize our dues. But still, gold ornaments, this exemption is not available. You must remember for your examination point of view. The exemption is available only for FDRs. NSC is eligible for surrender, not otherwise. Indra Vikas Patra, Kisan Vikas Patra, life insurance policy. Now, what are the NSCs eligible for surrender? They become eligible for surrender only on maturity, on death of the NSC holder, or on forfeiture by government, if the government forfeits it, or when ordered by a court of law. Under these 4 conditions only, an NSC becomes eligible for surrender. Now we come to consortium advance. Here, borrower is 1, but lenders are more than 1. So each bank may classify the borrower account according to its own record of recovery. Suppose PNB and KGB both have given a loan to a particular borrower. In KGB, it can be standard. In PNB, it can remain NPA. Each bank will see what is the record of recovery in my bank. And according to it, the bank will take action of classifying it as a standard or as NPA. Question 8, 9, I'm leaving. Now coming to income recognition. But kindly, just because of the paucity of time, I'm skipping the question. But in PPT, you will get everything. Kindly go through these questions. It will help you a lot. So income recognition, income from NPA. Whenever an account becomes NPA, we stop applying interest. And thereafter, if the borrower deposits some money, some realization is there, then we can take it to our income head. So income from NPA is not recognized on accrual basis, but is booked as income only when it is actually realized. Now this is important. So this is applicable to government guaranteed accounts also. We have seen for a state government guarantee, there was no relaxation. For central government guaranteed account, the relaxation was only for the purpose of asset classification. For income recognition, no relaxation. So for whether it is a central government guaranteed account or a state government account, for income recognition, same thing. It is income will be booked only when it is actually realized. But for liquid secure advances against liquid securities, FDR and SC, because if adequate margin is available, these accounts are not treated as NPA. So here I can book income on accrual basis provided adequate margin is available. Reversal of past income. Whenever an account becomes NPA, so for past periods, I will see what are the interest entries in this account. For term loan, from the date of sanction. For CC, from the date of last renewal. I will see what are the debit entries of interest, fees, commissions, etc. I will see the credits also. If my debits of interest, fees, commission, etc. are more than credits, then that part must be de-recognized. So I have two options. I can debit my interest income account and credit the account, or I can debit the interest account and make provisions in sundry provisions. So entire interest accrued and credited to income in past periods should be reversed. Reverse means credited to the account or provided for. Then provision is to be created if the same is not realized. So this I should remember, reversal of past income. Application of interest, the same treatment is for fees and commission and similar income that have been debited in the account. Application, this was for the past interest. For future, on an account turning NPA, further application of interest is stopped, but may be suitably recorded. Now we come to the very important aspect, how the asset classification moves from one category to another. Kindly see this slide very carefully. There is a date of NPA. For first 12 months, it will remain substandard. Next 12 months, it will become doubtful first category. Next 24 months, it will become doubtful second category. And thereafter, for infinite period, it will remain doubtful third category. So the question can be put in various ways. If from date of NPA, 12 months have passed, 12 months have passed, then what will happen? You will reach here. So this will become doubtful 1. If 24 months have passed, then we will reach here. It will become DB2. If 48 months have passed, it will become DB3. The question may be framed in various manners. Similarly, if it has remained doubtful for more than 12 months, you see, it remained doubtful here. If it remains doubtful for more than 12 months, it will migrate to DB2 category. If it has remained doubtful for more than 36 months, it started being doubtful here. So if it remains doubtful for more than 36 months, it will migrate to DB3. So the same thing I have put in a different way. Date of NPA for first 12 months, it is substandard. Next 12 months, DB1. Next 24, DB2, and thereafter DB3. And if we count from date of doubtful, now date of doubtful is here. So if 12 months have passed, it will become DB2. 36 months have passed, it will become DB3. Now, an account never becomes loss asset simply because of passage of time. It will become substandard to DB1, DB1 to DB2, DB2 to DB3, but from DB3 to loss, it will never become loss. It will be loss only when there is a loss of security. Some loss has been identified by bank's auditors, by RBI inspectors. Only then it will become a loss asset. And wherever even a small security is there, it may be a DICGC cover, it may be a ECGC cover, CGTMSC cover. Wherever this cover is available, this will not be reported as loss. They will always be reported as doubtful advances. This is important. Kindly see this slide very carefully. If date of NPA is 10 September 22, then it will be substandard for first 12 months, 10 September 22 to 9 September 23. From 10 September 23 to 9 September 24, it will become DB1, and so on. Why I am highlighting this? Suppose they tell you that the date of NPA is 10 September and you calculate provision on 10 September 23. And just in rush of time, you think that it is only a 12 months period, so substandard rate will be applicable. Your answer will become wrong. If the date is 10 September 23, then provision rates of DB1 will be applicable. So this is important, okay? This question I'm skipping question 12 here. I'm coming to erosion in value of security. Where realizable value of security becomes less than 50% of the value assessed by the bank, this account will be straight away classified as doubtful. There may be no overdues, no deferred in installment payment, no deferred in interest payment, but value of security, realizable value of security, becomes less than 50% of the value assessed by the bank or by the bank or accepted by RBI. The account will be straight away classified as doubtful. So, and next is where realizable value of security is less than 10% of outstanding balance, account to be straight away classified as loss asset. So for loss asset, 10% is related to outstanding balance. For doubtful, this less than 50% is related to the previous value of security. And less than 10% means a value up to 9.999, but not 10. It is less than 10. 10 is not included here. And if I say up to 10%, means value of 10 is included here. Up to 10% or not more than 10% mean the same thing. Why I am highlighting? Because in question, they will be giving you phrase less than 10%, up to 10%, not more than 10%. So please understand the distinction very carefully. Don't get confused yourself. Question 13, I'm skipping. 14, I'm skipping. I'm coming straight away to provisioning norms. For a standard asset, direct advance to agriculture and micro and small sector, 0.25%, commercial real estate sector, 1%, CRE residential. There may be an integrated project where the commercial FSI is not more than 10% of the total FSI. So residential units are more, commercial units are less. Such advances are known as CRE residential housing. And for them, there is a concession in provisioning. Here, only 0.75% provision is to be maintained. Housing loan at teaser rate. Teaser rate is nothing but concessional rate, less than card rate. Then 2% more provision. When the housing loan is attracting less interest rate, the provision will be more. All other advances 0.40%. Substandard, normal substandard, it is 15%. Then there are some unsecured substandard advance. Suppose I have given an advance for, I have purchased a check purchase account, or I have given a personal loan where I have not taken any security. So such account, whenever it becomes NPA, it will be known as unsecured substandard account. So wherever realizable value of security is not more than 10%, ab initio means from the beginning of the outstanding exposure. I gave advance of 1 lakh rupees and security, realizable value of security was not more than 10%, means it was 10,000, up to 10,000 only. From 100 rupees to 10,000 or 0. So when such advance will become NPA for the first time, it will be categorized as unsecured substandard advance. And provision will be 25% of outstanding balance. But if such unsecured substandard advance is in infrastructure sector, the provision will be 20%. For doubtful asset, DB1, DB2, DB3, everywhere we will be having some security. So my outstanding balance will have to be it has to be, I mean, I have to classify in two parts, two portions. One will be secured portion, another will be unsecured portion. For secured portion, DB1, 25% provision. DB2, secured portion, 40% provision. Unsecured portion, everywhere 100% provision. And in doubtful three, both secured and unsecured, 100% provision. Loss asset, 100% provision. Now, if advances are covered by some guarantee, ECGC, CGT, MSE, and this CRG, FT, LIH, home loan, it is applicable for home loan. So how the provision is to be calculated? You are most likely to get a question on this, some advance which is covered by CGT, MSE cover. The important thing is, say CGT, MSE cover is say 50% or 60%. So when I have to apply this 60%, first I have to deduct value of security from balance outstanding. And whatever remains, thereon you have to apply the percentage. You see the balance outstanding in the account. You see the value of security. First, you deduct value of security from balance outstanding. Whatever comes as a result, on that you apply the CGT MSE coverage ratio. So I will go with an example and this will explain you better. Question 19. A pre-shipment account. I'm sure somebody should interject in between, that you are able to listen me and there is no interruption. You are able to see the slide. Hello? Ajay sir? Hello? Can anybody tell me? Hello?
Hello, sir.
Are you able to see this slide and you are able to listen to my voice? There are no interruptions?
No interruption, sir.
Because and sometimes maybe that this Wi-Fi goes off and I go on presenting my session, and your people are neither able to listen my voice or nor able to see the slide, right?
Slides
So-
and voice is clear, sir.
So whenever there is some interruption, kindly do tell me by way of you can make a call. You can make a call to Ajay sir, and in turn he can call me.
Sure, sir.
So a pre-shipment account, it is a in the nature of CC account. It is DB2 as on 31st March 22. It has a debit balance of 4 lakh. The value of security primary and collateral is 1.5 lakh. Calculate provision as on 31st March. Now, balance outstanding 4 lakh. Secured portion will be 1.5 lakh, right? Because value of security is 1.5 lakh. Unsecured portion will be how much? 4 minus 1.50. So 2.50 lakh. Because it is DB2, so 40% of secured portion, 40% of 1.50 lakh, and 100% of unsecured 2.50 lakh. This will become 3.10 lakh. It will be the provision. Now, if in the same example, the ECGC cover is available to the extent of 50%, what shall be the provision? Same example. Now, we have seen the secured portion is 1.5. So I will first deduct 1.5 from balance outstanding 4. 4 minus 1.5. And on that, I will apply the coverage ratio, 50%. So ECGC cover will be 50% of 4 minus 1.5, that is 1.25. So my unsecured portion will be now 4 minus 1.50 minus 1.25 lakh. I will be reducing secured portion, I will be reducing ECGC cover from balance outstanding to arrive at unsecured portion. So secured portion is 1.50 lakh, unsecured is 1.25 lakh. So DB2, 40% of 1.5, 100% of 1.25, and I will be able to calculate the provision. Now, this is also important. Now, there are some types of term loan, especially in project loan, where the project is under construction. So there, the repayment of installment, it starts after a certain moratorium period. But normally during moratorium period, bank says that interest is to be paid as and when debited. The moratorium is not on interest. Moratorium is on the repayment of principal. So if such is an account and there is a default in payment of interest, what will happen? Now, suppose some interest was debited in 30th November 22. So this interest must not remain overdue for more than 90 days from 30th November 22. 30th November, you debited interest. It must be repaid within 90 days from 30th November. If it is not done so, it will become NPA. Now, this criterion is applicable. This has been stipulated. This is an amendment. This has come into force from 12th November 2021 only. Earlier guidelines were different. What they say, that interest debited during any quarter must be serviced fully within 90 days from the end of quarter. Let me explain it. You debit interest in 31st October, 30th November, 31st December. You add up all these three. So interest debited charged during this quarter, this will be the amount. And this should be serviced within 90 days from the end of the quarter. That 90 days from 31st December. So my 31st October interest, I could repay it within 90 days from 31st December. That was the earlier provision. Now, if the interest is debited on 31st October, it must be repaid within 90 days from 31st October itself, not within 90 days from 31st December. So earlier was interest due and charged during any quarter. It could be serviced within 90 days from the end of the quarter. No, now it is not end of the quarter. Whenever interest is debited, it should not remain overdue from more than 90 days from that date. Now these instructions, they were included in the circular of 12th November 2021, but these instructions are effective from 31st March 2022. In November 21 circular itself, RBI said that this change will be effective from 31st March 22. And now because your examination is in 2023, so these instructions are applicable. Classification is borrower-wise, not facility-wise. If one account becomes NPA in one bank, in one branch, all the borrower accounts of the same person will become NPA. So here, the car loan, housing loan may be in the same branch, or car loan in branch A, home loan in branch B, but the bank is same. Then if car loan becomes NPA, home loan will also become NPA. So at all branches of the bank. But if the bank is different, then this criterion, this principle of percolation will not apply. The different bank, they will see their own record of recovery. But advances against liquid securities, term deposit, NSC, IBP, KVP, they are exempted from the principle, the application of principle of percolation. They are exempted. Upgradation. If arrears of interest and principal are paid by the borrower in case of loan account classified as NPA, the account should be upgraded as NPA, as a standard account. Appropriation of recovery in NPA. The Reserve Bank has given discretion to the bank. They say you may decide the order. It may be cost, then interest, then principal. It may be cost, then principal, then interest. Normally banks recover first, they recover the cost. And interest and principal, they may change the order of recovery. But whatever order is decided by the bank in its policy, it has to be applied in all case of all the borrower accounts. No changes can be made. Now, disclosure requirements, we have to disclose gross advances, net advances, gross NPAs, net NPAs, details of write-off, technical write-off, and so on. Now, this is important. Now, how gross NPA percentage is calculated? Gross NPA percentage is gross NPAs divided by gross advances in percentage term. So, gross NPA divided by gross NPA, gross advances multiplied by 100. Net NPA percentage will be net NPA divided by net advances in percentage term. Now, how I will arrive at net advances and net NPAs? Net advances are gross advances minus certain deductions. Net NPAs are gross NPAs minus certain deductions. Now, these deductions are provisions held, DICGC, ECGC claim held, part payment received, balance in sundries account, floating provision, and so on. Now, this deductions I have to make. So, from gross NPA, I will reduce my provision, DICGC, ECGC claim, etc. And whatever figure comes, it will be known as net NPA. I have given a detailed question in question 25 example, given certain data, and asked you to calculate various things. So please see the solution, then you will be able to understand it. Now, effect of NPAs on profitability, we can skip. You know, once the account becomes NPA, we stop applying interest, means our income, we do not generate any income. Rather, we have to make certain provision. Whatever income I am receiving from other accounts, I have to set aside as a provision for this NPA. So my profit gets reduced. Then I have to make extra higher capital requirements are there. If you have gone through Basel capital regulation, NPA accounts attract more capital. My funds get blocked. Then if my profitability gets reduced, then RBI may initiate prompt corrective action also. The management of NPA, prevention, recognition means identification of NPA. Then resolution, I should either be able to upgrade it, or I should be able to recover my money. Recapitalization reform, I'm leaving it. Resolution of NPA, legal remedies, SARFAESI Act, State Recovery Act, Court, DRT, Lok Adalats. We will see in subsequent slides. Restructuring. Restructuring means changing the terms and conditions of the sanction. In one word, I can say, what is the restructuring of advance? I am changing terms and conditions of sanction. So restructuring aims at preserving viable units. Unit should be viable. If it is in difficulty, but over a period of time, it can repay. It is a viable unit. And minimizing losses to the creditors by way of providing timely support through an orderly and coordinated restructuring program. There are two types of restructuring, financial and operational. In financial, what we do, because the borrower is in difficulty, it means his cash flows have been adversely affected. Cash flow means the income from the unit. So cash flow, I have to align my debt obligation. I have to align my principal repayment, interest repayment, debt obligation with his cash flow. I will give him certain concession. So this is known as financial restructuring. And operational restructuring is enhancement of cash flows. I will say that you reduce your workforce. You do some retrenchment. You stop producing some products. You change production line. So this is my enhancement of cash flow. This is known as operational restructuring. So financial restructuring, reschedulement of debt, waiver of penal interest, waiver of processing charges, upfront fees, reduction in margin, reduction in rate of interest, and so on. These are components of financial restructuring. In case of operational restructuring, it may include sale of non-core asset, sale of non-core business, modernization, diversification, backward or forward integration, even a complete change in the line of business, change in management, optimization of workforce. These are all components of operational restructuring. In NPA management, we often resort to compromise, settlement, OTS. So I give him certain concessions, some waiver. Bank says that, okay, your dues are 1 lakh rupee, you pay me 80,000 and we close the account. Now this is known as compromise. We come to SARFAESI Act. Full name is Securitization, Reconstruction of Financial Asset and Enforcement of Security Interest Act. This was enacted in 2002. So very lengthy name. SARFAESI, Securitization, Reconstruction of Financial Asset, Enforcement of Security Interest. So this act provides legal framework for securitization, asset reconstruction, enforcement of security interest, and enabling provision for setting of SARFAES, Central Registry. This historical data I am skipping, coming to straight away, which is important for our examination point of view. Enforcement of security interest. Which are the account, where I can take SARFAESI action. There should be default. the account should be categorized as NPA. Then account should not be under exempted category. We will see what are the exempted category. Limitation should be alive, and my security interest must be registered with SARFAESI. These are the conditions. If these are satisfied by an account, I can initiate enforcement action. So how I initiate? I issue a demand notice. This is known as 60 days demand notice. So first, exempted category. Whenever any security is held by me under lien or under pledge, this is exempted because separate laws are applicable for lien and pledge. Then this is aircraft, vessel, unpaid seller, etc., etc. This is all for academic purpose only. This HIJ, these three conditions are important for examination. If the financial asset not exceeding 1 lakh is exempted. So financial asset must exceed 1 lakh. If financial asset means my outstanding balance with interest. If my outstanding balance is 1 lakh rupees, I cannot take SARFAESI action. If it is 1 lakh 1 rupee, I can take. If security interest is created in agricultural land, it cannot be, SARFAESI action cannot be taken. But it should be used ordinarily for the purpose of agriculture or allied activities. If in revenue record it is agricultural, but some manufacturing activities are being undertaken there, then such agricultural land can be enforced. So it should be agricultural land and it should be used for agricultural purpose only. Only then it is exempted. And J, last one is, where amount due is less than 20% of principal amount and interest due thereon. This is exempted. Means if you have given a loan of 1 lakh rupees, 10,000 interest was there. So 1 lakh 10,000. So 20% is 22,000. So if my dues are less than 22,000, SARFAESI action cannot be taken. The amount due is less than 20% of principal plus interest. So limitation, we have already seen that enforcement action can be taken only when claim is made within the period of limitation. Now demand notice was 60 days. This can be served by hand delivery, registered post, speed post, courier, fax, electronic mail, email. I can also send. If whatever I have sent and delivery, I should get an acknowledgement. Registered post, speed post, I should get an acknowledgement, or otherwise I can track on a speed post website. And if website says it has been delivered, I should get a printout and put it in file. I should have a proof. Sometimes the envelope may be returned to you. If the remark of postman is, the addressee was not found on this address, then this is not served. But if postman says that the addressee refused to take delivery, it is deemed that it has been served. It is a proof of service. So when you are not having any proof of service, then we have to paste this demand notice on the residence or on the business premises, and we have to publish the contents of this notice in 2 newspapers, one English, one vernacular. Then this will be substituted service. If I am not having proper acknowledgement of my service, then I have to resort to substituted service of demand notice. And here I have to take 2 actions. I have to paste the notice on the office, on the residence, plus I have to publish the contents of demand notice in 2 leading newspapers of the locality, one of which will be English, one will be vernacular. Now, if after receipt of demand notice, if he makes any representation, raises any doubts, then we have to consider it and we have to reply within 15 days. That you should remember this 15 days. Prior to 4th November 2016, this limit was 7 days. So if you are having any book, health book, textbook, older book, 7 days period will be there. But the revised time period is 15 days. If borrower makes any representation, raises any doubt, then we have to consider it and we have to reply within 15 days. Then thereafter we will go for taking possession of the secured asset. So how this possession of possession and sale is done? Movable asset, you read yourself. I am going to immovable asset, that is more important. Suppose you have to take possession of a residential house. So how you will take the possession? You will, the possession notice, the draft format is given in SARFAESI Act. So you will first print the possession notice. So you will deliver this possession notice to the borrower, then paste this notice on the property and publish this possession notice within 7 days from the date of taking possession. 3 things are to be done. I have to deliver the possession notice to the borrower. I have to paste this notice on the property. I have to publish it in 2 new newspapers, one English, one vernacular. And within how many days? Within 7 days from date of taking possession. And before 2007, there was no time limit. So for the last 15 years, this time limit of 7 days is there. So if I want to, I have just pasted the notice, I have published it, delivered. If borrower is residing there, some tenant is residing there, they have not given me the vacant possession, and I want to take the physical vacant possession, then I can make an application to District Magistrate, Chief Metropolitan Magistrate. So I will make an application there, and they will pass a suitable order within 30 days. And if there are some reasons beyond control, then they may take 60 days time. So DM, CMM have to pass the necessary order within 30 days or 60 days necessarily, compulsorily. This is in law. And this 30 days, 60 days period, it has been introduced with effect from 1st September 2016. Earlier, no time limit was there. So in older book, again, this 30 days, 60 days may be missing, but please remember it. Now, Ajay sir, are you in the loop? Hello? Ajay sir?
Hello. Yeah.
Hello. So,
Yes,
can I extend? Can I exceed my time?
No, you can exceed, but I just want to, how many of them would like to continue? Hello? Would somebody like to continue the session or not? Hello, can somebody respond? Do you want to continue or not? Hello? I can hear. Hello? At least,
Hello.
yeah, Sumesh.
Please continue.
Anyone else?
Yes, sir. Please continue.
Yeah. You can continue, Sir Agrawalji.
So with your permission, with the permission of participant, let me continue for half an hour. I will rush through the PPT now. Now for sale, only you should remember 2 things. When we are resorting to first time sale, then we have to give 30 days notice of sale to the borrower. First time sale. If my sale fails, the bidders are not there, or the bid I am not accepting, the bid is very low, and I am putting the property for resale, then for resale, 15 days notice will be sufficient. Earlier, for every sale, I had to give 30 days notice. Now, for first time sale, it is 30 days. For next time, it is only 15 days notice. Sale can be by 4 methods: quotation, tender, public auction, or treaty. In case of IP, I have to confirm the sale also. Confirmation of sale in favor of person making highest bid tender. So how the sale proceeds are received? Normally, when a person participates in auction, he first deposit 10% money, initial amount. Then 15, if his bid is accepted, then he has to deposit another 15%. So total 25% money comes to me. So this 25% money should come to me on the same day or not later than next working day. Earlier it was said in the law that this initial deposit of 25% of sale price should be made immediately. Now immediately word has been clarified. It is on the same day or not later than next working day. And balance 75% is to be paid on or before 15th day of confirmation of sale, or such extended period as may be agreed upon between, earlier was between parties in writing, only this much was there. So parties means the owner of the property, he also said that you need my consent. So the government in 2016 removed the word parties and said agreed upon between purchaser and secured creditor. The bank and the purchaser, the bidder, they will agree what is the extension required. The owner of the property whose property is sold, his consent is irrelevant. And now this period extension, earlier no limit was there. Now law says maximum 3 months. So these are the changes with effect from November 2016. And if he fails to make the balance 75%, then this money is forfeited 25% and the property shall be resold. Thereafter, we issue certificate of sale in favor of the bidder and he becomes the owner of the property. This I am skipping. Coming to State Recovery Acts. This is important. Many states have enacted such laws. Recovery of dues in respect of advances relating to agricultural and allied activities. Similarly, some states have also enacted Public Monies Recovery of Dues Act or Public Debt Recoveries Act. Here, a certificate issued under these provisions is like a decree of a civil code. So here, manager issues the recovery certificate, gives it to the revenue authorities. So some revenue officer goes to the borrower, recovers the money, deducts some amount and deposit this balance with the bank. Normally 10% amount is retained by the state government and balance is deposited with the bank. So we can use this State Recovery Act for the purpose of recovery of our NPAs. Now here the important thing is the filing of certificate proceedings will not save the limitation period for filing of suit. Now suppose we have issued, the manager has issued a recovery certificate, given it to the revenue authorities, and during that period our limitation gets expired, then I will not be able to file a recovery suit in court or in DRT. So this does not save limitation for purpose of filing of suit. That is important. Now we come to civil court and commercial court. For recoverable, whenever there are dues, we have got one option is SARFAESI Act, another option is that we file recovery suit in court or DRT. So what are the relevant provisions? For recoverable amount less than 3 lakh, recovery suit is to be necessarily filed in civil court. And here, civil procedure code provisions are applicable. For recoverable amounts of rupees 20 lakh and above, the recovery suit is to be necessarily filed in DRT under Recovery of Debts and Bankruptcy Act. So what for 3 lakh to 20 lakh? I have got an option, a discretion. I can file recovery suit in the civil court, or I can file the recovery suit in commercial court, because in many district commercial courts have been established under Commercial Courts Act 2015. So far, whenever a recoverable amount is between 3 lakh to less than 20 lakh, recovery suit can be filed before the civil court in terms of civil CPC or before the commercial court under Commercial Courts Act 2015. But for 20 lakh and above, I have to file in DRT. Now we come to DRT, DRTs quickly. These are created under Recovery of Debts and Bankruptcy Act. Friends, earlier name of this act was Recovery of Debts Due to Banks and Financial Institutions Act 1993. Now it has been changed to Recovery of Debts and Bankruptcy Act 1993. Act is absolutely the same, only its title has been changed. DRT and DRT both are one-member tribunal. DRT's head is known as presiding officer, PO. DRAT's head is known as chairperson. So the question is asked like this: who heads DRT? We have to say PO, presiding officer. Who heads DRT? Chairperson. In DRT, presiding officer is assisted by registrar and recovery officer. Now, eligible amount of debt due to any bank or financial institution or consortium of bank FI to be rupees 20 lakh and more. Right? Whenever my dues are 20 lakh and more, I have to file my recovery suit in DRT, and that recovery suit is known as original application, OA. And where I can file? Suppose your Kerala Grameen Bank Kochi branch has given loan, and the borrower is also in Kochi, so it has to be filed in DRT Kochi. DRT under whose jurisdiction Kochi falls. But if the branch is in Kochi, the unit is in Trivandrum, then now I have got two options. I can file it in DRT Kochi or I can file it in DRT Trivandrum. Earlier, I had to file only in DRT Trivandrum, where the borrower was carrying on activities or he was residing. Now where the loan is parked, there also I can file the suit. Pardon me for a minute, please. Hello. अभी नहीं बेटे, चल रही है क्लास, अभी मैंने बढ़ानी पड़ गई थोड़ा. ठीक है, ओके. So from 2016, this amendment has come. I can file it in DRT Kochi, I can file it in DRT Trivandrum. Now, time limit for DRT, it is within 180 days. It is expected time limit as per law. Now, in appeal, if the borrower, if bank can go to the appeal, bank can file appeal, borrower can file the appeal. So we can go to DRT within 30 days, right? But if the borrower wants to go to DRT, then he has to deposit certain money, which will be 50% of due amount, which may be reduced by DRT to not less than 25%. So if borrower has lost his case in DRT, he wants to go to DRT in appeal, then he will have to deposit money, and that money will be the 50% of the due amount, which if he makes some application to DRT, then DRT can reduce it to not less than 25%. Before 2016, this 50-25 was 75% to zero. It means he had to deposit 75% of the amount, which could be waived by the DRT. Now DRT cannot waive it fully. Minimum 25% he will have to deposit. Now this fees structure, when we file suit, 12,000 for first 10 lakh, for each additional 1 lakh and 1,000, maximum is 1.5 lakh. And DRT, it is a slab system, 3 slabs, 12,000 for debt less than 10 lakh, 20,000, 10 lakh to 30 lakh, and 30,000 for 30 lakh and above. So you have to remember this DRT fees structure also. Now coming to Lok Adalat. Lok Adalat, they have been created under Legal Services Authority Act. They will give name Lok Adalat Act. There is no such Lok Adalat Act. They can give CPC, CRPC, RDB Act, SARFAESI. No. The Lok Adalats have been created under Legal Services Authority Act. You should know. Now, which cases can go there? Any case, whether it is a suit filed or non-suit filed, it can be referred to Lok Adalat. But it should be compoundable. Non-compoundable cannot be taken therein. In bank, every case is compoundable. Means because we are concerned with our recovery of due. All right. But if someone say electricity, Lok Adalats are also there, someone has committed theft of electricity, then this offense is non-compoundable. Now, such non-compoundable offense cannot be taken to Lok Adalat. That is the purpose. In bank, every borrower account is a compoundable. You pay the money and everything gets settled. No issues. Now, monetary sealing, this you should remember. Lok Adalats organized by civil code, up to 20 lakh they consider. DRT Lok Adalat above 20 lakh. CPC, Civil Procedure Code, is applicable here. They are all civil code. They are deemed to be civil code. Every award of Lok Adalat is a decree of the court. And because both the parties have appeared before Lok Adalat and the Lok Adalat official, they have arrived at a compromise. So whatever award they pass, it is in the nature of a consent decree. And once a decree is consent, no appeal can be filed. So you should remember, appeal of Lok Adalat award is not possible. And if a suit filed case is taken to Lok Adalat, and in Lok Adalat compromise happens, Lok Adalat passes an award, then whatever court fees was paid at the time of filing suit, this is refundable. Now we come to credit control and monitoring. Friends, because I am having a paucity of time, these you will get in detail in the PPT. Let me cover some important things here. I'm sure documentation, I am sure you have somewhere, in some other session you might have seen. Various types of security you have already, you have been, the class has been taken yesterday.
But Agrawalji, but this details various types of lien, various types of mortgages, pledge and all will be useful for the candidates.
So I will be including in PPT. They can go through it.
You can.
When is their examination?
Exam is not declared yet. What they can do is that they will get sufficient time to go through it. For as far as we are concerned, we want more of them get promoted, and they
should get promoted.
Yeah, they should remember us what we have done. So that gives us the satisfaction. So,
but Ajay sir, I saw the schedule. In yesterday's class, this various types of
This was covered. This was
Yes, sir.
covered in the sense that it was mentioned what is pledge, what is mortgage, and all those things. So the details of different types of mortgages and all those things was not there because everything had to be covered in 1.5 hours. So so if we can share this, they can go through that also. This will be very handy for
I
them.
will be sharing the entire. This is a very lengthy. It has become a very lengthy PPT.
No, this will be useful for from the examination point of view. This will be an exclusive thing which they can go through it.
Yes.
And I think anything because if they go through it 2 or 3 times itself, they will get they can answer all the questions because credit information and everything you have mentioned in this, and credit rating is there.
Yes, credit rating is also there.
Beautiful. That's good. That's really good. Okay.
So, because time permits me to does not permit me to cover everything in detail.
No
So
issues,
friends,
because they can go through it. If they have any doubts at any point of time, they can. You can note down my number. My number is 7034372121. You want my number? Hello. Would you like to have my? Yeah, I will note
Yes,
down.
Tell once more, sir.
So I have given it in the chat box 7034372121. Okay. And Agrawalji, you can tell your put your number in the chat box so that if at all any doubt is there, let them.
yes, I will.
So we are giving both the numbers in the chat box. Okay, so that our intention is that you should go through it. If any doubt is there, you just don't hesitate to post it. Okay.
So this slide of CIC, Credit Information Company, is it visible, Ajay sir?
Yeah, it is visible.
Okay. Now, credit information companies, they have been created. We all know there are 4 CICs in India at the moment: CIBIL, Equifax, Experian, and CRIF Mark. CIBIL is the oldest one. Now, why are they have been created? For creating a database to be used by member institutions. Member institutions are credit institutions and other telecom service providers. They are also use this data. And credit card providers, they also use this data. So for extraction of credit information report on borrowers, for considering their request for credit facilities. So there are 4 credit information companies. They have database to be used by member institutions. They draw credit information report, CIRs, on prospective borrowers for considering their request for credit facilities. Now, this CICs, their operations are governed under Credit Information Companies Regulation Act 2005, CICRA. So please remember this act, Credit Information Company Regulation Act 2005. Now, 2 important provisions are Section 2F defines what are the credit institutions. Credit institution means banking company, includes a bank, RRB is included, FI, NBFCs, etc. Credit card, business activity, housing finance, or the one which is specified by RBI from time to time. So RBI has got a very big discretion. They can include any institution within the purpose of, within the meaning of Section 2F. Now, another provision is Section 15 of this Act. This law says that every credit institution is required to become member of at least one CIC. Law stops there. Law says that minimum one CIC you should be member, but you can be member of more CICs. It is at your discretion. But Reserve Bank issued one guidelines. RBI said all credit institutions must become member of all CICs. So in law, become member of at least one CIC, but we can be member of more CICs, no doubt, as per law. But RBI says all credit institutions have to be member of all CICs. And after this act, earlier we had to obtain consent of borrower to share his information to CIC. Now, with the operationalization of this act, banks, etc., can submit data to CIC without obtaining consent of the borrower, co-obligants, and guarantors. Now, credit information report give vital information to the credit institution. There are three things are there: identity information, name, address, mobile number, PAN number. This is in part of identity information. Then credit information, what type of loans are availed, from which institution availed, what is the repayment pattern, if there are any overdues, compromise, write-off, everything is given in credit information. Then history of inquiries, last. If the prospective borrower has approached many banks, many credit card issuers, then he will have a long history of inquiries. Now we will be guided by that this person is very, it is inclined to raise loans from multiple institutions. Now, whenever we have to make any fresh sanction, enhancement of existing credit facilities, review renewal of credit facilities, any type of ad hoc additional, we have to draw CIR from CIC on all the obligants. And bank prescribed charges are recoverable. The bank can prescribe charges and they are recoverable from the applicant, customer, borrower. This chart I have given, nature of the account, then CIR should be drawn for whom? For proprietorship account, the firm and proprietor and guarantor. Partnership account, firm, each individual partner, guarantor, and so on. Please read it. Now, this is usually some type of advances, they are exempted, like advance against bank's own FDs, etc. They are exempted from drawing of CIR. Now, this is as per the internal guidelines of each bank. Now, this is an important provision. Section 21(1). You need not remember the section, but you should remember the provision, the meaning of that provision. Any person who applies for grant or sanction of credit facility from any credit institution may request, means if the borrower, a person comes to you, he applies for a loan, and you have drawn a credit information report from CIC, he can request in writing that you please provide a copy of this CIR. He can request. And he may request. It is up to him whether he requests or not. But once he has requested, then you have to provide. Because in the next section 721(2) says, every credit institution shall furnish, subject to payment of such charges. You can recover the charge. But if the person has requested you, then you as a banker, you are duty bound to provide him a copy of this credit information report. And maximum fees of ₹50 has been prescribed by Reserve Bank of India. Now, SARFAESI, we all know, this is Central Registry established under SARFAESI Act. Full name is Central Registry of Securitization, Asset Reconstruction and Security Interest India of India, SARFAESI. Initially, it operated Security Interest Registry only under SARFAESI Act. Whenever a security interest is created, modified, or satisfied, this transaction has to be recorded in SARFAESI. Initially, it was only like this. Now, since 2016, SARFAESI is also operating and maintaining Central KYC Record Registry under PML rules 2005 maintenance of record. So, SARFAESI, two registries are there: Security Interest Registry, Central KYC Record Registry. Now, Security Interest Registry, security interests of immovable, movable, intangible, factoring, assignment, or receivable, they have to be registered with SARFAESI. Then integration of registration. Companies Act, with ROC, we register our charge. Partnership deed, they are registered under Registration Act. they are registered under Partnership Act. Registration Act means that whenever a property is sold or transferred, then it has to be registered in the Registration Act. Motor Vehicles Act, Merchant Shipping Act, Pension, all these registration, they have been integrated with SARFAESI. So if Motor Vehicle Act, we have given some loan for car loan. So this information I can draw from SARFAESI portal. This integration provision has been made effective from 1st September 2016. Now IBA has clarified that the bank has not to register their car vehicle loan on two portals, on Vahan or SARFAESI. They have to register only on Vahan portal. So IBA has clarified that registration of charges relating to motor vehicles are to be made only on Vahan registry and not on the SARFAESI. Any vehicle registered with Vahan registry will be deemed to be registered with SARFAESI also. So that is the advantage of IBA clarification. This is important. From 24 January 2020, one amendment has come into force. It has come into effect. No enforcement under Chapter 3 of SARFAESI Act means enforcement action, that 60 days notice, taking possession and selling. This will be possible unless security interest is registered with central registry. If security interest is not registered with SARFAESI, I cannot take SARFAESI action. And if it is registered, dues of secured creditor will have priority over all other things. So this is the advantage. Now, CRILC, this is Central Repository of Information on Large Credit. This is also an important tool for credit monitoring. So whenever my aggregate exposure is 5 crore and above, fund-based, non-fund-based, then I have to report the credit information to CRILC, including SMS status. And outstanding current account balances, whether they are in debit or credit, means whether it is a CC account or whether it is a OD account or whether it is a simple current account. If it is 1 crore and above, I have to report it to CRILC. And CRILC, 4 parts are there, section 1, 2, 3, 4. Kindly read it. If you have any questions, then you can ask me. I have to report the information on non-cooperative borrowers to CRILC also. Non-cooperative borrowers mean he is defaulting in timely repayment. He is denying access for inspection. He is obstructing sale of security. He is thwarting, he is creating hurdles in my recovery efforts. Then this is a non-cooperative borrower. And if it is having an aggregate exposure of rupees 5 crore and above, then the information of non-cooperative borrower is also to be given to CRILC. Red flagged account, all accounts, red flagged account where some fraudulent activity is suspected or has happened. These are known as red flagged account. And if the balance is 50 crore and above, then I have to report it to CRILC. LEI, you might have heard, Legal Entity Identifier. This is also a tool of now credit monitoring and credit purposes. This is a 20-character alphanumeric code. It is a global standard. And for all persons, now some time limit were given for 50 crore to 100 crore, 50 crore and above. 31st December 2019 was there. And 5 crore to 50 crore, RBI has to issue a separate roadmap. So borrower who do not obtain LEI are not to be granted renewal enhancement of credit facility. That is important. Right, friends? So this is important for me for credit monitoring. Now last is credit rating. What is credit rating? The term credit rating refers to a quantified assessment of a borrower's credit worthiness. Whether I should give him loan or not, whether he is credit worthy or not. His credit rating will decide. So credit rating is an evaluation of credit risk of the prospective borrower. Objective are three: whether to accept or reject his proposal, and what interest rate I will charge. If he is more credit worthy, I will be happy to charge him less. If I am having a more risky customer borrower, I will be charging him more rate of interest. And then this credit rating, in case of individual borrower, it is okay, but at macro level for bank also, it is important that my bank has got more AAA rated accounts, more B rated. My bank's credit portfolio. This also helps. If I know the credit rating of individual account, then at macro level it helps me to formulate policies. There can be internal credit rating, there can be external. Most of the banks in India have set up their own credit rating models, right? Because till recently we were not well equipped, but now they have set up their own credit rating model. But some external rating agencies are also there, like CRISIL, ICRA, CARE, ISMERA. Full name is SME Rating Agency of India, Brickwork Rating. So here also external rating agents are also there. And what is the methodology of credit rating? What areas we see? We see promoters, management aspect, and securities available. How are the promoters, their past record, the management aspect, what are the securities available, financial aspects based on analysis of financial statement, balance sheet, profit loss account, other financial statement, business project risk, overall business risk, how is the business risk. So all these factors, they come into play in deciding the credit rating of a particular borrower. So friends, thank you. With this, I've completed. I've skipped many things, but in PPT, you will be getting the entire PPT. Kindly go through it. This is a quite big subject. IRAC, NPA management, SARFAESI, DRT, Lok Adalats, credit monitoring, restructuring, and credit rating. So within a short period of 2 hours, I could only talk this much. But this PPT is running into 177 slides. It's quite voluminous. I don't know whether you will be finding time to read it or not. But if your time permits, kindly go through it. It will help you a lot. And till the examination date is, your examination is there, you are free to ask me any question, anytime during all the 24/7 days. Right, friends? I will be sharing my, in where I will find the chat box. I am giving my mobile number.
Yeah, or you can type, I will share, no issues. Well, you can tell, I can share, no.
Yes, this is my number.
Yeah, good.
Right. So, friends, feel free. And whenever anybody will ask, I will be answering it. No, there is no group. So, that person I will be answering. Right.
Okay, Agrawal ji, thank you for stretching to beyond stipulated time, and we will be sharing this. This must be sufficient for them to cover any question from these areas. Okay.
Yes. And all the best, friends. Good night to you. I am now taking your permission to leave. Right.
Thank you very much.
So tomorrow, Ajahn sir, I will be giving you this